Let's do a quick crossover to the FMDQ exchange, please, for debt market analysis. And I'm being joined by a fixed income dealer at GT Bank, Chioma Udu. Good morning, Chioma. Glad to see you.
Good morning. Glad to see you too.
Now, the fixed income market closed bearish yesterday, although with a mixed sentiment at the bond segment of the market. What factors would you say drove sentiment in the market on Tuesday?
Okay, in the bond space, we know that there's an auction today. 105 billion is on offer, where 35 billion will be is offered on the 5 and 7 year, and then the 10 year has 45 billion. We have seen a lot of portfolio players try to rejig their portfolio in such a way that they will be positioned to take the anticipated uptick in yields today.
And I know there's a bond auction today. What are your expectations?
We expect that the yields will close at current market price, which is currently at 15.4%. We also expect that we're going to see a lot of players tilt towards the long end, the 10-year bond, which has 45 billion on offer.
And should there be an OMO auction tomorrow by the CBN, what are you expecting?
There's a maturity of about 347 billion coming into the system tomorrow. We expect that the rates will remain, or rather, we also expect that there will be an uptick in rates, especially at the long end, at the 1 year offerings, if they offer at the 1 year. This is as a result of the expectations we have around the political scenarios. We have seen a lot of FDI players stay on the sidelines. And for us to entice them to either remain or come in, we should be looking at an uptick in rates.
And domestic sovereign bond yields remain sustained at an average above 14%, while it seems that the appetite for shorter-term treasury bills still dominate. Are there opportunities for investors at this time to ride the yield curve?
Like you rightly said, ride the real yield curve. We've seen a lot of people try to play, a lot of investors playing at the short end of the curve because there's a bias that interest rates is on the rise. So it makes it easier for them to quickly get out of their positions and enjoy the anticipated rise in interest rates.
And do you think it's optimal for investors at this time to play on the short end of the yield curve or the long end?
It is advised for you to play at the short end of the curve so that you can quickly rejig your portfolio to enjoy the anticipated rise in interest rates. Yes, I think it's the right thing to do right now.
And what is your broad-based outlook for the market for the rest of the week?
We're going to see a very active market tomorrow, especially at the short end of the curve. If the CBN comes in to offer OMO or to take out the liquidity in the markets, we're going to see a lot of trading at the short and the mid and long tenor of the short end of the curve. And we're going to see some bargain buys at the short end of the curve, which is currently trading at about 12.5% discount.
All right, thank you for your time, Chioma. Chioma Udu is a fixed income dealer with GT Bank.